Hey everyone, welcome to the Koriffic watch list for the week of May 17th. And today, a little bit later, I'm going to be flying over to Los Angeles, California. In the meanwhile, it's very nice outside in Canada. But of course, you are here to take a look at what is going on with the markets are all in all. And we had quite an interesting week last week where we went up, down, and all around, but ultimately all that was is consolidation. So what we ended up with on NASDAQ is a Doji right where we have the quite a few orders from buyers and sellers stacking up more generally. So we pushed higher, and then towards the OPEX, which was on Friday, we essentially pushed and slammed down quite aggressively. All in all, on the week, we're at 1.54% down. However, if we are looking at the daily chart, you can see that we're sort of like creating this trend line right now. And if you're like me, when you look at stuff like this, you're essentially seeing the consolidation that is playing out more generally. All in all, we are still in a bullish uptrend on a weekly, I believe on a monthly as well. Perhaps there's a little bit of stall right now, but it looks like an uptrend still. Weekly uptrend, daily uptrend, and of course right now what we're looking at is a consolidation on smaller time frames. So from this structure you can essentially see a bearish engulfing right here. We broke below 20T, so I wouldn't be surprised if we go a little bit lower to maybe 50T, tap it, and then continue going somewhat higher. From the events, we don't have very much coming up this week. On Wednesday, we do have FOMC minutes, but those are going to be less important to us. We also have NVIDIA earnings after hours on Wednesday, and that is going to be the only big market moving event, excluding anything that Trump can say and do, as he always does. So all in all, from presidential schedule, we don't have very much right now. He was in China, came back just now. Kevin Warsh last week was finally confirmed by the Senate. And a lot of people were posting that meme where every single time the new chair is coming in, the market is dropping. And, there were 4 observations, so that's not especially a huge sample size that you would trust, but you also have to remember the economic circumstances in each one of those scenarios. In our current scenario, and we have to think about what is going on right now in our current scenario. So from that perspective, what is going on with our current scenario? We are looking into inflation re-accelerating. The inflation prints, how do you say that? Were like fucking horrible last week. They were like blowing inflation out of the water. That's the consequences of both tariffs, but as well as the oil, or I wouldn't call it the crisis just yet, but oil challenges coming from the Middle East that are driving all of the pricing upwards. So what that is generating for us is a 10-year push. If you are using the box system, we essentially had a consolidation across pretty much a month, and now it's breaking out towards 4.6 and potentially even higher. On a weekly time frame, we have this nice cup and handle, and naturally the yields on the 10-year are running. As you can see, whenever they get pretty high, we tend to slam down pretty aggressively, and this is usually a taco spot for Trump when he gets uncomfortable with very high interest rates, and then does something to ease the pressure, ease the tension for us. So with this very strong candle, I mean, we are naturally looking at continuation, but of course there's the level in, or sort of the line in the sand is at around 4.7, maybe 5, where it gets to that level, we essentially start moving backwards very rapidly. So that's what I'm watching right now. If you look at all of the sectors on Friday, all of the risk assets, especially the highest risk assets, dumped, and all of the less or more so connected to the bond yield measures, they went upwards. Naturally, WIX went upwards, and that is because the volatility is entering the market. 10-year is at about almost 3%, 2.98. XLE oil, whenever we are talking about inflation, oil usually goes up. And the dollar also got caught a little bit of a bit. TAN is remained somewhat neutral, but TAN is kind of like one of those sectors that flies under the radar. What was interesting as well is, well, why don't we take a look into SOXX first, which is semis. So we see this first dark cloud cover where we opened higher and then we slammed down. It's not a super strong dark cloud cover, but nevertheless, from Japanese candlestick methodology, it suggests that the path of least resistance is going to be somewhat lower. That being said, what we do want to see after these types of patterns is a confirmation. So that is the following candle on the weekly time frame also needs to close below the close of this past week. So if we close below this at the end of this week, then the path of least resistance is going to be lower. Also, we do have a holiday the following week on Monday in the US. So after Wednesday, after Thursday, after we're done with NVIDIA and all of the allocation, we probably are going to start drifting into the weekend on low volume while everyone is essentially going on vacation to the Hamptons or so. So that is the story of SOXX. Where did the money rotate to on Friday? If you were following my trades, and in particular IGV, you can see that the money actually moved into this sector, and IGV is a software sector. This was a pretty decent candle. It's like you can see it's not moving too much, but it is showing that there is some rotation. You can see the pickup in the volume in here that was driving the IGV very much forward. So when we talk about IGV, what are we talking about? We're talking about things like Microsoft Corporation. So Microsoft is looking pretty good right now. We recovered the 20T right now. This kind of looks like a head and shoulders pattern right here, and potentially we can get to about 440. We can also see that these two traumas are flattening out, and as soon as 20T crosses through them, we can look for a move to about 500 on Microsoft. So that is a pretty nice, beautiful move. What we do need to do is recapture this 200T, and that is what we are going to be watching for in here. So 440 as our next target, and then after that we are looking for 480, 510 in here. So in other words, we're looking at, it looks like Microsoft might have come out already. So money is rotating. It is going to be moving from one sector to the next, and our job as traders is, of course, to identify those flows and figure out where the money is going to be going. Another sector that I wanted to point out for you, the discretionary. So in here, what we do have is a double top pattern. So you can see top number one, top number two, in both cases was slammed lower. This particular pattern in here is, I think we're calling this the dumpling drop pattern from the Japanese candlestick methodology. So that is, we're kind of like rounding, and then dumpling drops. So and we close below the box in here. So if you wanted to short something, this would be a nice place to short, because once inflation starts going up, the discretionaries actually start, or the consumer discretionaries start going down, because people have less money and they're willing to pay less for all of those more luxury goods. So in here, the immediate first target is going to be 114, but the next target is going to be around 112. And that sort of coincides with different zones that I'm watching in here. So in here, what we're looking at is just getting to this zone, right, to the upper end of this monthly or of the monthly 20T that is moving. So once we get there, I think that there is going to be essentially a bounce. Of course, that all is conditional on how geopolitical tension plays out, how this entire 10-year is going to play out more generally. So those are the sectors that I'm watching. Now for the specific names, I was checking out Almonte very quickly, but let's take a look at the few names that I was looking at last week. So first of all, we had Apple, and what I was saying is that we're going to get to the top of this trend line, or potentially my preferred path was to come back, retest this box, and then go to the top of the box. But Apple, of course, said, you know what, no, we're not going to go for a retest, and went straight for the trend line. So now the path of least resistance is actually going to be lower for Apple, in my opinion, because if you look on the weekly on Apple, we essentially have been tagging this trend line several times and then rejecting and going lower. So what I'm expecting is that we probably are going to see a little bit of that retracement from this trend line, at least initially, and maybe that is going to be a good entry at the retest of the box altogether. So right now I still have my alert in here, and we'll see if that is going to trigger. But for now, I don't think that there's too much for me to do with Apple. I might just move this to the top of the box, and if it gets above the trend line, then we would have to rethink the idea altogether. And I'm going to remove it from the list because it's less relevant now. UNP is another one of the names, cup and handle, monthly consolidation, beautiful breakouts, looks very nice. And we are essentially looking for somewhat of a continuation in here. We have a flag, and we just broke out from the flag. So this looks very good. Union Pacific Corporation, Railroads Transportation, and that naturally could be another one of the trade ideas that you could continue taking. NVIDIA, of course, got half of the first target. I was mentioning it to a lot of other people who are thinking about dumping NVIDIA because it's too expensive. But of course, too expensive is a relative term. Too expensive in comparison to what? So if you look at the SOXX chart, NVIDIA is nowhere as extended as SOXX, and it kind of needs to do a catch-up. We have a weekly consolidation, we broke out, and the path of least resistance, of course, is going to be higher. So right now, run up into earnings over Monday, Tuesday, and Wednesday is potentially can drive NVIDIA towards the highs, and that, of course, is going to generate a momentum push for NASDAQ. So that's another consideration in here. Finally, we had Mara, with Bitcoin not doing too well, but essentially what we did is we came back for a retest, just as I was expecting, and what I'm looking for right now is a recapture of this candle right here, and once this candle is recaptured, the path of least resistance is going to be higher. So that is the expectation right now for Mara. I hope that you waited for the comeback, and we're looking for the strength if you decide to enter. I'm going to continue watching this, but for now, very interesting play. XLE recovered quite nicely. We do have double bottom now, and the path of least resistance, of course, is higher. IGV, already mentioned it. I did take a AVGO position last week, and it did trigger, and on Friday it did hold the 20T, which also is quite a nice sign. So a few names that I have for this week is Amazon. Amazon is looking pretty good for a nice short. This is in consumer discretionary. We already had the top, tried to push through, came back under Dumpling top, so dropped the Dumpling, opened another one of the walls in here. And in here, once we are below 50T, we essentially are going to be going down. So that is the expectation for this particular trade. It's about 2 to 2.71 are very nice trade. You would have to make sure that you're looking for a close below 262.29 for a short in here, with your stop loss going to be just right here at 270. XLY already talked through consumer discretionary. ZS looks pretty great from all of the crossings in here, but sometimes you look at things and maybe you start thinking that, hey, maybe this thing is done. But if you look at the daily time frame, you have head and shoulders, you have the pan top type of scenario where you flip the pan and so the piece of food is flying out and it's holding in here. So that's a very bullish momentum sign. First stop is going to be 173, and then after that we are going to essentially to the most traded zone at around 200 and continue and going even higher. So in here we're really looking at the turnaround story, and right now what we see is that the price actually closed above the 50T, above 20T on the weekly time frame, so the turnaround is very real and very possible. Finally, Figma. A lot of people were talking to me about it during the IPO, and they're like, I cannot believe that this thing went down. But this is the typical IPO pattern. We go down, bottom out, spend a little bit of time in there, and then start orchestrating a turnaround. Most traded zone in here, another highly traded zone in here, but we did close above 50T on the daily time frame. On the weekly time frame, we're still below the 20T, and as soon as we recover that 20T, the path of least resistance is going to be higher, and we are going to continue going towards around 32. So that is about 39% move on an 18% risk. So 2R. Now, all in all, from the larger time frame perspective, I'm sort of expecting a little pullback, a little consolidation, nothing too major in here. Oh, and finally, one last thing that I want to talk about is both copper and silver. Copper broke out, came back very aggressively on all of the sales that were coming on Friday with the OPEX. And in here we held the 20T, very powerful on a weekly time frame. This is not the most pretty candle, but we'll see how that continues to play out, because we are continuing to be in a strong uptrend overall. And then from the silver perspective, we broke lower. That's also because silver, gold, and copper right now are trading as risk assets. And in the environment where we say, hey, risk off, we essentially withdraw the money from pretty much everything and then dump it into US dollar. I guess it is moving into dollar when we are withdrawing, or moving into XLE. So that is kind of the scenario right now. So from the perspective of the individual ETFs, I am still holding them because if you know, I have a point of view on what is going to unravel over the summer, and if the entire idea around inflation and the credit challenges is going to come to fruition, then naturally money is going to flow into hard assets. So that is gold, silver, copper, Bitcoin, and potentially oil as well. So that's why I'm still holding some of those positions in here. The actual stop is going to be 64.32 for me when it comes to silver, and that is because then we will see that this uptrend is actually not an uptrend and just a consolidation. And then for the copper, similarly, you can see an uptrend, higher highs, higher lows. And if we do break the uptrend, and here I used the window as my stop, then that would signal to me that potentially my trade idea was wrong. If you look at it, you kind of see the head and shoulders in here, but it kind of was broken. So let's see how that plays out. But my strategy right now for both silver and gold and copper is to wait and see. So that's that from my perspective, and I hope that you are having a wonderful Sunday. And if you are in Canada, happy holiday, Victoria Day, and I'll see you all from Los Angeles. Cheers.